Okay, good morning, folks, and welcome to Swing Trading Today. This is Bob Desmond at the Contrarian Trader. It is November the 19th, 2018, and at current, it is 5:20 in the a.m. Eastern Standard Time. Let's kick things off with our analysis of the market for members. I posted the week ahead commentary in the members area last night. Welcome new members. If you haven't checked out the week ahead commentary, please do so. It's where we review the health of the overall market, and then we segue over and into a review of our positions, as well as a deep dive into our focus stocks, which I sent out on Best Stock Charts. If you're not currently a member, sign up for the 2-week free trial offer. When the website is launched in very early January, you should expect the prices to go up. So take advantage and lock in your current membership dues right now, because they will not be raised for new members. Let's get to the charts. Pre-market activity, 4-hour chart of the S&P 500. We are down slightly this morning. We're off the lows, but we're also off the highs. We have a bit of resistance above here, right here at the 2740 level. Given seasonality, meaning the time period between Thanksgiving and Christmas, as well as Hanukkah, you see a bias to the upside for the markets. Why is that? You have institutions that become flush with cash due to IRA contributions at the end of the year, 401k contributions, etc. And they want to put that money to work, especially after the recent sell-off. Does it make them right that they are buying now and that this correction is over? No, of course not. But they are under pressure to deliver alpha. Now, what I am seeing here that is a bit of a concern, and this is going to carry through to the NASDAQ as well, is that we may, just may, be setting up here for a head and shoulders setup. And it's a bearish pattern, meaning we have a left shoulder, head, right shoulder. Here is our neckline here. You could use this one, but it may be a little bit too conservative for some. Here's another, which I would prefer, and that's right at the 2,678 level. Watch for a break below that level. But if we rally up and through 2756 on the S&P 500, get ready for a Santa Claus rally. Let's take a look at the NASDAQ. The NASDAQ looking okay in a rising wedge formation. It also has a head and shoulders setup, left shoulder, head, right shoulder. Here's a more conservative neckline right here, very conservative. Another neckline right here at the 6837 level, and here's a far more liberal neckline. And if we break the support level, we're coming back down to the October lows. Now, at current, what we're trying to do is recapture this resistance level, which we broke back here on the 12th. Now, if we manage to recapture and close above resistance at, let's call it the 6917 level, expect a rally up to probably 7,000 to 7,050 on the NASDAQ. Moving on to the US dollar. The dollar is behaving very bad. We closed down below the last 4-hour bar, below this critical support level. And we in fact have a new weekly low on the US dollar. So we'll be watching for a continuation breakdown on the dollar. I think it's going to happen. Now, when you talk about the dollar, you need to take a look at gold as well. And gold is behaving very, very well. We are, yes, down on the session, but we had broken down overnight. But now we have recaptured not one support level, but two. We have RSI, which is rising. We are currently very bullish on gold, silver, and the gold mining stocks. That doesn't mean you go running in and put your entire portfolio into these names, but we are in the early stages of a major bull run. That's my opinion, and we will continue to build on strength. Now, unlike the dollar, which put it in a new weekly low this week or this morning, we do not have a new weekly high as of yet on gold, but I think that it will be coming shortly. Crude oil, it broke down overnight below this lower band of support. So it looks as though the bears are beginning to regain control of oil. And you may be saying, Bob, it's up this morning. What's the problem here? The problem is that we have resistance above vis-a-vis the declining 50-period moving average on the 4-hour chart. We broke down below support. So while, yes, we are up at current, until we recapture these two support levels, particularly the 68.50 level on the Brent price, it's simply a watch. I wouldn't go shorting it, but I certainly wouldn't go buying crude oil. What should help crude is a breakdown in the US dollar if in fact we do see a continuation breakdown. Let's get to members' stock chart request. First up, weekly chart, Apple. Apple closed down last week about 5 1/3 percentage points. Both lines on Stokes are trading down below the 50 level, which is bearish. RSI down below the 50 level on a weekly basis, which is bearish. Now, we saw 7 consecutive weeks of distribution on Apple, and that distribution came by institutions on big volume. So do I think the bottom is in? Maybe. We may pull back and retest. Let's throw a line up here. Okay. We may pull back and retest the 185 level. That acted as a launching pad back here in July, where we broke out above it, consolidated, retested it, and then ripped higher. So we did a round trip from the July breakout. Now we need to see whether or not what was resistance is now going to act as support yet again. Now, if this fails, expect support at 179.47. So we're in a range of where Apple could be bought. And one valuable observation here is that you still have the 50-period moving average, which is rising, and that will act as a rising floor of support. But I am concerned about the distribution bars. These are institutions. This is not mom and pop selling 100 shares. This is Fidelity, Goldman distributing shares. That doesn't mean we can't get a counter trend rally into the holiday season. Daily chart. Now, on this daily chart, we were in an orderly downtrend channel, but we kind of went parabolic on big volume back here on the 12th. This could be a bit of capitulation selling. Now, there's 2 ways to play this. One is wait for the pullback to prior lows, either at the 185 level, 186 level, or down to the 179 level. I think it's quite possible that we get there. Or wait until we recapture this prior lower band of support. I prefer a pullback and a retest of recent lows because you have a ton of support levels back here. That means that you have reservists, meaning you have other buyers that are like-minded to the long side that are willing to step in at these support levels to help bid the shares up. If you bought where we closed on Friday, you're not going to have much in terms of support by fellow longs. So I would wait for a retest of these support levels. RSI still in a downtrend with lower highs and lower lows. Volume on Friday dropped down to below average. So I don't see a rush to get long of Apple right now. Wait for that pullback. Wait for that higher low. Arrow environment, AVAV, the symbol, weekly chart. All right, so this is a very, very nice chart. We broke out the week of November the 5th. Last week, we pulled back, did a retest of the breakout point, but we're unable to go positive on the week. But net, despite the fact that we closed down 2 1/3%, still a fairly bullish week. Stokes beginning to hook up. So I think the play here is to watch for a rally, a continuation rally up and through 103.46. I would keep it small. And then as we rally up and through 121.32, which will mark the all-time high, add more. Buy on strength. Now, one concern here is that volume to the upside has been dropping off. Now, to the downside, volume has been very light as well. So net, I'm bullish on AVAV, but wait for a continuation breakout. And if you get a pullback yet again, which is entirely possible, to retest prior support at, let's call it 94 to 94.50, you could add at that retest of support. If we break back down to within this trading range and close there on a weekly basis, you need to stop out because that would be a breakout point failure or a bull trap. Daily chart, we're very close to a breakout here on a daily basis. There's that 103.46 level, which I just mentioned on a daily chart. So we have higher lows. Now we need higher highs. No breakout yet on RSI. A very nice chart. Higher lows on Stokes. I think we're going to break out here on AVAV. Canopy growth. We were long of Canopy Growth. We got stopped out a few weeks ago, and thank God that we did. Now, here was the market sending a signal back here while we were in this trading range. We broke out, but that breakout failed, and we flashed a bearish key reversal. Now we're trying to hold on to support at, let's call it the $32 per share level. I wouldn't be a buyer of these shares until we rallied up and through this upper band of resistance on a weekly basis. Volume is very high to the downside, so we're still seeing distribution. Both lines on Stokes down below the 50 level, but they're beginning to show signs of flattening out, which is bullish. Daily chart. Daily basis on Friday, we flashed a doji star formation. That's a sign of indecision. Odds favor bulls. We have a W formation forming. We have formed the left side, the pivot point. Now we're forming the right side of that W formation. If you want to speculate, I'd be fine with opening up a position here on CGC with a stop right below 31.82. So I'm growing more bullish on CGC. We may be involved ourselves on this trade. Looking at RSI, you can see that we broke out of this secondary downtrend line. It means really nothing. It's just an early warning trigger that's telling us that, you know what, we're beginning to see signs of life here on RSI. Watch for a hookup. Down volume on Friday was very light. So CGC, I think, is consolidating very, very nicely. I'm turning more and more bullish on the shares. We may be long very soon on CGC. The next stock up, Fox Factory Holding, FOXF, the symbol, weekly chart. We broke out last week to all-time highs, a beautiful chart. Not only did we see all-time highs last week on an intra-week basis, but we closed above 73.10, and we did so on very strong volume, which has been rolling in above average for the past 3 consecutive weeks. Stokes, very strong. Before I render an opinion on this chart, let's go to the daily chart. Obviously a breakout as well last week, rising Stokes. I think if we get a continuation move higher, you can open up a small opening position, but ideally, you'd want to wait for a pullback and a retest of the breakout point. It's coming. It's very likely that we will get the pullback and a retest, just like we did here. We broke out on the 6th. We rallied, but guess what? Sellers moved in. They took it off the highs of the day on the 7th. And what do? We pulled back. We did a retest of not one support level, but 2. We broke out yet again on the 12th, did another round of retesting, then it was off to the races. History may not repeat itself, but it certainly rhymes. I would expect a pullback. That's how I would play this. Even though you may get a continuation move higher, I would wait for the pullback and a retest. If you want to scratch the itch on a new weekly breakout, fine. Keep it small. Wait for that pullback. If you plan on staying long for the longer term. If you're doing a day trade or a short-term swing trade, all right, fine. You may not want to sit overnight with the position. That's not how I necessarily trade, but different strokes for different folks, and many are successful with their strategy, so I do not pass judgment. And that is it for this morning, folks. For those of you checking out, going on holiday for the Thanksgiving holiday, please have a great time with your family. Happy Thanksgiving to you. For those who are going to be sticking around, I'll try to do a couple more swing trading todays. If you'd please follow me on YouTube, give me a like, leave a comment, click that bell button, follow me. I would appreciate it. And everybody have a very profitable trading week, and I will talk to you soon. Be well.